When it comes to making money in the Nigerian stock market or in the US stock market, there are two major ways that people know through which they can make money. Number one, capital appreciation. Number two is through dividend. And most people only know these two. But the truth is there are two other ways you can make money. Two other ways. So I'll be talking about dividend and that capital appreciation in 3 and 4 because people even do it the wrong way, and that's why they lose money in the stock market generally. That's why they lose money, because they do it the wrong way. Some people, you see them investing not knowing that that company they invested in is paying dividend, while it's possible that that company is paying dividend twice in a year, which is they pay interim dividend and they pay the final dividend. So let's go into it. Now, when we talk about making money, number one, you can make money through what we call rights issue. Right issue, because people usually hear right issue, they don't even know what right issue means. Right issue simply means the right given to existing shareholders to buy the shares or stocks of a company at a lower price. It's more or less like it's an opportunity for them to buy it at a rate cheaper than the market price. It is not always like that, but in most cases, it's usually lower than the market price. Now, when you see right issue not lower than the market price, maybe as at when they proposed it, it was lower, and by the time it was not effected, something else happened. But on a normal day, it's usually lower. Example of such is Wema Bank. In April this year, they issued a rights issue. So how do you make money through rights issue? Because you hear something like 1 for 2, 1 for 3, 1 for 4, and so on and so forth. It means, for instance, if it is 1 for 2, let's say you have 100,000 shares, not 100,000 shares. I'm talking about volume now, not value. Now, when you have 100,000 shares in a particular company and you are being offered 1 for 2, which means for every 2 shares you have in that company, you have the right to buy 1. So you have 100,000 shares, it means you have the opportunity to buy 50,000 shares. So now let's come to the aspect of price. As at that point in time that the right issue is being offered to the existing shareholders, let's say the market price is 10 naira per share and the right issue is now 9 naira per share, which means as at the time of buying, you already have a gain of 1 naira per share. Can you now imagine that you are being given the opportunity to buy 50,000 because you have 100,000 shares in that company? Now, 50,000 multiplied by 1 naira, which is the gain because you are an existing shareholder, which means as at that time, if you can buy it on that day and sell it the second day. Can you imagine? You can buy it on that day and sell it the second day. You have made how much? You have made 50,000 naira. This is just an example. So that's what some investors, that's what they do. So they wait for right issue, for a company to offer them right issue, and they buy because most times it's cheaper than the market price. So you can buy it at that price and just quickly flip. We call it stock flipping. You can quickly flip it, you buy and you flip it. I hope you understand. So that is number 1. Number 2 is what we call bonus issue. I know many people know dividend, but bonus issue also work like dividend. Because whenever you see a company declare dividend, there's something called markdown, where the share price, the market price, is reduced by the amount being paid as dividend. And I'll give you an example. Let's say, for instance, a company declared a dividend of 2 naira per share. 2 naira per share. And the stock of that company, the market price is 10 naira per share. The market price. Once they pay that dividend of 2 naira per share, they are going to deduct the 2 naira from the share price. It is called markdown. So also, at times when companies want liquidity in the market, they want liquidity, then there are several reasons why they issue bonus issue, why they usually give bonus issue to their shareholders. And one of the reasons is when they want liquidity in the market. Now, the money they are going to use to effect that bonus issue, because they are going to pay for it, is usually taken from retained earnings, is usually taken from the reserve. The money they could have given to shareholders as dividend, so they will use it to give them as shares. Now, Don't forget, when they mark down after paying dividend, they expect that stock to rebound, especially if it is a good stock. So also, when bonus issue has been given to you, and that now the share price is being marked down, at a point, it will definitely rebound. Once it rebounds, what now happens? Which means you have gained money. I hope you understand what I'm saying. So it's either a company gives you dividend or they do what? They give you bonus issue. Because in both cases, now see what happened in this month, July. As you can see on the screen now, Linkage Assurance PLC did bonus issue of 1 for 3. While the other two companies you are seeing on the screen now, they did what? They paid bonus. That's why you are seeing X dividend price. X dividend, which means it has been marked down. So they are similar to each other. Because it is not everybody that likes receiving dividends. Some people, they sell because they are not sure that after the company has paid dividend, the share price is going to rebound. They only stay in it. They only receive dividend when they are sure that the market price is going to rebound. If it's not going to rebound, and there are parameters you look at for you to know that this company is going to rebound. I don't know whether you are getting my point. So they receive almost the same treatment. It's almost the same thing to shareholders. It's either you receive bonus issue or you receive dividend. So once you hear that they want to do bonus issue, just like they want to give dividend. So instead of giving dividend, some companies give bonus issue. That's number 2. Number 3 is what we call dividend, which we call profit sharing. A company giving you part of their profits. For instance, they have made, let's say, 100 million naira. They can decide to say, this is 100 million naira as our profit. Let's give our shareholders, let's give them 30% as dividend, while we retain 70% in the company. And when you see dividend paying companies, they may decide to give 60%, they may decide to give 50%. I hope you understand. So that's what we call dividend payout ratio. Now, some companies pay quarterly, some companies pay semi-annually, some companies pay yearly. And if you are yet to be receiving dividend from the company you invested in, maybe you know they pay dividend, then you need to reach out to your registrar in order to fill the e-mandate form. You may say you don't know your registrar. Reach out to your stockbroker. If it is Meristem, United Capital, reach out to them. Atlas Portfolio, Morgan Capital, reach out to them, AfriInvest, that you have not received your dividend. They will give you the link through which maybe you are going to fill the e-mandate form and eventually submit it to your registrar. Your registrar will get back to you, and before you know it, you will see your dividend. So then the last but not the least is what we call capital appreciation. Capital appreciation means you buy at 10 naira, you are selling at 15 naira. You buy at 10 naira, you are selling at 20 naira. So that difference is what we call capital appreciation. But you don't make it until you sell it. You don't make that gain until you sell it. Thank you so much for staying with us till this present time. If you are yet to subscribe to this channel, kindly do by clicking on the subscribe button and click on the notification bell so you can be notified whenever we release any video. So we meet in our next video. Stay blessed.